with your loved ones. Okay. So I got a lot of currency pairs right here on my watch list, from the crypto market to the currency that is a foreign exchange. These are they got a lot of currency pairs I'm watching right there, or the marked or tagged red icons right there signifies the currency pairs I am watching. That is on based on today, Monday, 18th January of 2021. If you are new to the channel, you are welcome. And then do not forget to like this video, share this video as well with your loved ones. So I'm going to navigate from the major currency pairs downward to the minor currency pairs. So before we venture into the major or minor currency pairs, let's check on the metals market. That is gold and silver. What is gold and silver up to today? What is gold and silver up to? So here is a chart of gold 4-hour chart frame. So I got a minor key level structure marked on the gold right now. So if you are trading or you want to trade the gold, at the moment right now, there's a rejection, a strong bullish rejection at a minor key level structure of the price level of the 1,824.40. So here is the level right here. We got a support. Okay, I'm gonna change my pen to black pen color right here. So right from there's structure right here. Okay, let's make this pen a little bit bold. Okay, right from this level right here, you can see we got a support structure right here. The head and shoulder formation, which was being carved right here, failed, and then the bullish rally continued. We got a retest of this level once again. And now price actually retested this level once again. Remember the last swings high right here was being rejected from the last swing low we got right here. So if you want to take this trade right here, you have to be very careful of the minus structure, which acts at the price level of the 1,860.00. So if you want to execute the trade right here, the first question you need to ask yourself is the risk reward ratio right here favorable for the trade right here? So let's try and analyze that. Let's check out if the risk reward ratio is favorable. Let's zoom in. So if I should implement a trade structure after the breakout of this bullish pin bar, this level right here, if I should take a trade from this level right here, technically the right zone my stop loss should be at the swing low right here. And you can see right from my measuring tools right here, it's marked 1.73%. And then before I can execute a trade right here, I must have at least enough room, distance away from my stop loss to my take profit target, at least 2 risk reward ratio. So if I should measure 1.75 from this structural low right here to this level right here, 1.75, you can see it's even above the resistance structure right there. So this is why I don't feel convenient buying gold yet at this level right here. So what I can figure out right here is the a range market. So I tag this kind of market right here as a point A to B trade setup, point A to B trade setup. So if I want to buy gold right here, the risk reward ratio right here is not favorable. So this is why I'm going to neglect the setup we got right here on the gold. So I'm going to navigate based on the the daily chart frame and see what is actually going on based on the daily chart frame. So this is what I'm gonna do. I'm gonna exercise more patience to see the outcome of gold. So this is what I'm gonna do. I'm not gonna buy the gold yet right now for the fact the key level we got is a very strong level. So I'm gonna tag a key level structure right here. If I should check this key level structure based on the daily chart frame, you're gonna figure out this level acts. This major key level structure is at the edge of this range market right there. So I don't want to buy right there. The risk reward ratio right there is not favorable for my kind of liking. So this is why I'm going to neglect buying the gold yet. I'm going to patiently focus my attention based on the daily chart frame to see what the end of today's buy is going to carve. So let's move on the silver as well. Here is the silver. Let's check on the daily chart frame of the silver. The silver as well is carving the same bar, bullish pin bar at the swing low we got right here. At the swing low, and then this is a double bottom right we got a double bottom structure. We got a first bottom right here. We got another formation of a bottom right here. So this is the pattern we got right here. But the reason why I don't want to take this trade is because the risk reward ratio is not favorable for my liking. So any trade I want to take, I always look out for at least minimum of 2 risk reward ratio. So this is about money management. So you don't just take a trade because you can figure out, a buy, or maybe a sell setup. You have to properly analyze your risk reward. So I don't want to buy. If I'm going to buy right here, I have my stop loss right here. This is the next potential key level resistance. So let's take a measurement. If I'm buying from this level right there, I have my stop loss right there. I'm going to risk 3.3%. So I need to have at least 6.6%. So this is 3.3% right here. 3.3% is almost at the same extreme resistance major key level right here. So it's not favorable. This is where I should at least have extension of my take profit target. So there is a hindrance right here, which may act as a point of, hindrance for the bullish rally. So I'm not going to buy right here. Those who are going to take this trade right here are traders, or maybe traders who want to implement the one risk reward ratio or system, but that is not my kind of trading. 3.3 and then 3.3. So I'm not convenient to take this trade right here. I'm looking out for at least minimum of 2 risk reward ratio. So I love to take trades which are gonna give me at least 2 risk reward ratio room, or maybe 2 risk reward ratio room. But the minimum I'm gonna go start from 2 risk reward ratio and then look up for more risk or favorable ratio. So this is based on my own trading rules, okay? So let's check as well other currency pairs. Let's check the US market. That's the energy market. The US oil. The US oil is currently carving a double top based on the 4-hour chart frame right here. Here's the 4-hour chart frame. They got a first top right here. We got a second top right here. We got a neckline. So price is currently trading above the neckline. So let's see how it's gonna, the 4-hour bar, the end result is gonna be. Maybe price is gonna make a rejection. Maybe this level is gonna make a rejection of this current price structure for a more bearish downward rally on the US oil. So that is that on the US market, US oil. So let's check on the British pound sterling. I got a British pound sterling right here. If you watch my weekly forex forecast I released, that was 24 hours ago, you should have an idea of what is going on right there. I already stated out there's tendency for price to make a pullback to this low right here and then pull back to the major key level structure right here. So if you are trading the British pound sterling against the USD, then you should actually know what is going on at the moment, what is currently going on. So This is the weekly chart of the British pound sterling against the ULZ. So here's the daily chart frame I got right here. So we got to pay close attention to see how price is going to react to this last swing high low we got right here. Likewise, the major key level structure right there is also a swing high low. So the pattern we got on the British pound sterling against the USD right now is not yet well defined. So the rally right there is still under the influence of the bulls. Still under the influence of the bulls. So I am not yet convenient to buy right here. That's what I want to share with you on the British pound sterling paired against the USD. So let's check the euro as well. The euro is currently trading in a bearish downward trend. Here comes the 4-hour chart frame. I and the entire VIP members of FSLS, we have been charting this currency pairs right from this medium right here. We got our take profit 1 right here. Then we got our take profit 2. I mean, this level right there. This should be our take profit 2 node level. So if you are following my trading analysis ideas on this currency pairs, you should have tagged take profit 2 right now. So let's quickly analyze the risk reward ratio we implemented right here on this trade right here. We chart right here. We got our stop loss right here. That is, we are risking 41 pips downward to the first take profit target right here. That is risk reward ratio of 1. And then right here, we got no more than 2 risk reward ratio. So this is the kind of trade I love to take. At least the trade we got right here is based on 3 risk reward ratio. So these are the kind of trades I love to take. 3 risk reward ratio. So if you're in the VIP members community, you should have taken advantage of this trade setup and have at least 3 risk reward ratio or profit in your trading portfolio by now. So that is that on the euro pair against the USD. So what's next now on the euro pair against the ULZ? Price is currently trading at this level last swing we got right here. So let's see how price is going to react. If price can offer a pullback, a rejection right there for a more bearish downward rally, then it's a nice setup for continuation of this bearish rally. But you got to pay close attention to the major key level support, which acts at the price level of the 1.19402. So that is the next support level. That's the next support level. So as well, you got to be very careful if you want to short right here. So let's check as well on the ULZ yen. ULZ yen, let's check the daily chart frame. The daily chart frame is still under the influence of the extension of the dynamic resistance trend line we got right from this level. That is from March of 2020. We can see how this level has been rejecting price for a bearish downward rally. So the ULZ Japanese yen is still under the influence of the bears. Not until we can figure out a strong bullish close of daily bar above this dynamic trend line, and then closing above this resistance structure of the 104.558. So this is the resistance level we got to pay close attention to. Can see the double bottom we got right here. So price is currently still trading above this high low swing. I gave this analysis in my last weekly forecast I released 24 hours ago. So you can make reference to the weekly forecast so you can have a more better understanding about this currency pair. So let's check on the USD pair against the Canadian dollar. Let's check the 4-hour chart frame. Here is the 4-hour chart frame of the that is the ULZ paired against the Canadian dollar. This currently pair is currently trading still under the influence of this dynamic resistance trend line we got right from November 2016. Actually, we had been on a bearish rally, which had been existent or I think let's check that. Let's check the existence of this bearish rally on the, okay, right from this level structure. Okay, that was right from the October 29th. This was the last low high swing. So this bearish rally, strong bearish rally. So currently price is retesting once again this extension of this dynamic no resistance trend line, also at a key level zone. So this is a confluence factors we got right here. This is a confluence zone. There's a confluence zone right here. So you got to pay close attention to figure out how price react to this level. This level right there has a lot of interest for the bears as well for the buyer. So you got to pay close attention to see what price is going to carve right there. Maybe it's going to be a more bearish no prayer bar downward. So that is what we got on the USD pen against the Canadian dollar. So as well, let's check on the USD switch. Here comes the USD switch. I love the pattern we got right here, an inverse head and shoulder. Right here is the left shoulder. We got a red shoulder right here. We got an edge right here. Here comes the neckline. We first got one right here. That is a head and shoulder inside another bigger head and shoulder. So we got a neckline right here. So you gotta pay close attention to point X right here. Pay close attention to this level. Okay. So if price can offer a breakout, a retest would be nice. It all depends on the price action bar we can figure out right there. But currently right now, based on the 4-hour chart frame, price is building up for a bearish sentiment. Okay. Bearish prayer bar, a bearish close of bar below this last bull bar right there will signal more bearish downward rally to this right shoulder right here. So monitor the USD switch based on the 4-hour chart frame. So I got the Australian dollar paired against the USD as well. The Australian dollar paired against the USD is in one of the currency pairs I am watching. So I'm going to share with you. Here's the chart. And then there's something I want to share with you guys for those who jumped the gun. I think a trader told me how he lost this trade right here due to the bullish engulfing bar which carved at an inverse head and shoulder we got right here. This inverse head and shoulder got right here. Let's analyze this, why this failed. This is all about patience. Right here, we got the left shoulder. Right here, we got the edge. Right here, we got the right shoulder. Price broke out with a bullish engulfing bar. Looking out for a retest would have been the best strategy right here. So those who bought at the first breakout of bar right here took the first breakout. This is why I always advise, do not take the first breakout. First breakout, don't first break out. It's risky. So taking the first breakout right there, you can see how price made it pull back. This is the zone you should actually look out for buy opportunity of a retest bar. So it failed. It failed. And it closed, price closed below this right shoulder with a strong bearish bar, which just signifies this pattern right there has been invalidated. Okay. So price is moving more downward. Welcome back. That was a short disconnection right there. So let's check this out. If you are trading, if you want to trade, that is the Australian dollar paid against the ULZ. Forget about the inverse head and shoulder right here. And focus right now at the next key level, major, minor level structure, which acts at the price level of the 0.76433. Okay? This is where you need to focus your attention to right now. This pattern right here is no more active. New Zealand paired against the ULZ. Let's check that out. We got an head and shoulder, which is still active. I share this as well. That is in the weekly forecast I released. We got the head, we got the shoulder, we got the shoulder, we got a neckline, we got a neckline, we got a swing eye right here. If you are selling right there, it means you are taking the failure swings of this bullish bar right here. So you got to pay close attention to this level. If you are trading right here, you got to be very careful, trade your profits. So the next level you got to very, very conscious, careful about is this level which acts right here. So you got very, very careful this level structure. There's a price level which acts at the that is a 0.70097. So pay close attention to this level. Okay. So let's check the British pound sterling against the Japanese yen. I share this setup right here with the VIP members of FS Flex. I said we got a first retest right here, second retest, third retest. This was the fourth retest we led into a breakout. I don't want to take the first breakout right here. So what we got right here, can see that? I said it is best to wait for a retest. This was a retest. The retest carved a bearish bar back down. So this is why you shouldn't take a false breakout. It's very, very risky. Consider that. So what I'm patiently looking out for now is I want to see how price going to react to this level right here. The price going to move up again to carve maybe a right shoulder, then down for what is sell. So we can see targets right here as a left shoulder, not until this pattern formed right here. We got it right shoulder right here. We got an edge right here. We got a neckline right here. So that's my personal idea on the British pound sterling paired against the Japanese yen. So let's check the euro paired against the yen. I and the entire VIP members know we discussed about this currency pairs, and there's some members are currently shorting this currency, and I told them you got to be very, very careful, trade your profit. Don't let the market get back your profit from you. We got a minor level, we got to pay close attention to right here. And that is the price level of the 125.00. So you got to very, very careful right here. So you can see price is currently pushing this level. So make sure you trade your profit or you close your trade and look out for a new breakout right here, a retest for a more short downward. So that's what I want to share based on the 4-hour chart frame of the euro paired against the Japanese yen. So you can see the strong bearish bar, the bar, and then now we got the into of price reduction in bearish prayer. So that is what we got on the euro paired against the Japanese yen. So let's check on the Australian dollar paired against the Japanese yen. Pay close attention to the Australian dollar paired against the Australian yen. And you have to be very, very careful if you want to short this currency pairs. If we should measure right from the retest structure right here to this level right here, I got 72 bars. And then from this level again to the retest right here, I got 127 bars. And from this level right here to this retest of this trend line right here, I got 108 bars. So you got to be very, very careful. The bullish rally on the Australian dollar paired against the Japanese yen is still on a strong bullish rally. So if you want to sell right there, you should be very, very careful and then don't risk much because price is not much clustering to the dynamic support trend line right here. we can see we don't have a frequent retest, which just suggests this trend line is turning into a weaker support trend line. So this is it right here. You can see the distance away from the retest. So there's possibility price can break out right here and still continue the rally. Because we still got a low high swings right here. Price still needs to close below before we can figure out this actually a bearish low rally. Okay, so if you want to sell the Australian dollar paid against the Japanese yen, you have to be very, very careful. Make sure you analyze this market properly. Look out for a well-decisive bearish breakout. Look out for a strong retest of bar, signifying a more bearish continuation before you short right there. You don't just sell due to the first bearish breakout right here or with a mine retest right there. It's very, very risky. That is my own personal opinion. So very, very careful. Okay. So New Zealand paid against the Japanese yen. Likewise, same pattern we got on their Australian dollar paid against the Japanese yen. So very, very careful if you want to sell this currency pair. You are very, very careful. You can see the distance away, which just signifies a very aggressive bullish trend rally. Imagine those who short at the break of these low swings right here. You can see the pullback. So you can see the pullback. So if you want to short right here, pay close attention to the major key level support, which after the price level of the 73.476. Very, very important. And then let's check the Canadian dollar paid against the Japanese yen as well. Based on the weekly chart frame, we got markets going through a series of fluctuation within our falling wedge channel right here. So price is still trading at this medium. So there's a lot of bullish sentiments right here. There's possibility of an imminent bullish breakout approaching. Okay. The constant retest, swing low, high low we got right here for another retest. So you got to pay close attention, very, very careful. If you want to trade the Canadian dollar paid against the Japanese yen, here comes the daily chart frame. These are the series of high, low, and there's tendency for price to cover a high, low right there for a bullish breakout. So this was the last. We got a rejection right here, rejection right here. There's tendency for price to make a rejection right here for continuation of a bullish no breakout. So be very, very careful if you want to short the Canadian dollar paid against the Japanese yen. Analyze your chart. Check on the 4-hour chart frame. See how price is going to react to this last swing right here, swings right here, swings right here, and then this medium right here. Analyze properly to see more bearish no pattern formation before you short downward. So I got a switch paired against the Japanese yen. I paid a close attention to this currency pairs last week, but I am not confident with the kind of shopping market we got right here. So the formation I got right here, I know this formation right here has a lot of bearish sentiment, but I am not confident to short this pattern due to the kind of a choppy, not defined pattern right here. So this is extension to more bearish downward rally. So that is what I want to share with you based on the major currency pairs and the Japanese yen currency pairs. The crypto market, the Bitcoin, what is going on the Bitcoin? I already sold all my coins because I can figure out right now what is going on the Bitcoin, Ethereum. I don't like the kind of bullish or momentum we got right here. So don't like this pattern. What I got right here, it's got a high, we got a low high, and price can retest downward. So no one's not, maybe it's gonna be a bullish upward rally or maybe a bearish downward rally. So this is a state of indecision right now for Bitcoin. So I sold all my coin. So I have no reason to regret. I made a lot of return profit on my investment on the crypto market. So it's okay. I don't want to be greedy. So on Ethereum, price broke, but the momentum we got right here after the breakout of this symmetrical triangle right here, still very weak momentum. So this is what I want to share with you in the market. So thank you guys. If you love this video, make sure you give it a thumbs up, like this video, share this video with your loved ones. If you haven't joined my free trading class, this is where you learn how to trade the forex, crypto, stocks, energy, metals, market. So sign up today and then you get access for free. As well, if you want to become a member of the VIP community where we share trading ideas, there's a link under this video. Share the link so you can become a member today. And if you want to invest in the US stock market on a free commission stock brokerage firm, there's a link under this video as well. Click on that link to register today and start investing in the stock market. As well, there's a reliable brokerage firm you can as well register with and start trading on a reliable, honest, trustworthy forex brokerage firm. There's a link. The link is under the video as well. So thank you guys. Thank you so much. And then if you haven't watched the last weekly forex forecast I released 24 hours ago, please, I would advise you to watch the video. It's going to be very, very helpful for you to have a more better understanding about the forex market this week. So that is all I have for you guys. You have a wonderful day ahead. Peace.